Welcome to our CFP exam preparation discussion focusing on a crucial element of insurance planning: disability insurance. Let's dive deep into this topic that frequently appears on the exam and often trips up test takers. Disability insurance fundamentally serves as income replacement when someone becomes unable to work due to illness or injury. Many candidates misunderstand the true purpose of disability insurance. It's not about compensating for the disability itself, but rather about replacing the lost income that results from that disability. The definition of disability is absolutely critical in these policies. Understanding the various definitions is essential for both the exam and real-world practice. The most favorable definition for clients is own occupation. This means the policy will pay benefits if the insured cannot perform the duties of their specific occupation, even if they can work in another field. For example, a surgeon who loses fine motor control in their hands would receive benefits even if they could teach medicine. A common exam mistake is confusing own occupation with any occupation. Under any occupation coverage, benefits are only paid if the insured cannot work in any job suitable to their education and experience. This is a much stricter definition and leads to fewer approved claims. Modified own occupation represents a middle ground that often appears as a trap answer on the exam. Under this definition, benefits stop if the insured works in another occupation, even if it's not their original profession. Test takers frequently miss questions when they fail to recognize these subtle but crucial differences. Let's talk about the elimination period, which is another key concept. This waiting period between the onset of disability and the beginning of benefits typically ranges from 30 to 365 days. The longer the elimination period, the lower the premium. Here's where candidates often make mistakes. They forget that the elimination period is about controlling moral hazard and reducing premiums, not just making clients wait for benefits. Group disability coverage through employers often comes up on the exam. These policies typically replace 60% of base salary and are usually capped. A critical point that test takers miss is that group coverage benefits are usually taxable when employers pay the premiums, while individual policy benefits are tax-free when insureds pay with after-tax dollars. Integration of benefits is another challenging concept. If someone has multiple disability policies, they don't necessarily receive full benefits from each policy. Coordination of benefits provisions prevents someone from receiving more in disability benefits than their pre-disability income. The exam often tests this concept through calculation questions. When preparing for disability insurance questions, remember to analyze the occupation definition first. This is usually the key to unlocking the correct answer. Pay attention to whether the question involves group or individual coverage, as the tax treatment and benefit calculations differ significantly. One final point that frequently appears on the exam involves residual or partial disability benefits. These provisions allow for partial benefits when someone can work, but with reduced income. The calculation typically involves comparing current earnings to pre-disability earnings. Don't fall into the trap of thinking disability benefits are all or nothing propositions. Remember, disability insurance questions often require multiple steps of analysis. Take your time, identify the type of coverage, understand the disability definition, and consider any tax implications before selecting your answer. These questions are designed to test your ability to integrate multiple concepts, not just memorize definitions.